Perfect. It's looking great. Hi everyone, welcome back to a new episode for this week. It is about bots, signals or indicator and which one of them is are the best or nor of them. In many cases, people choose when they're starting trading with signals. Signals are basically sets when somebody or professional trader in most of the cases give you an alert when you should buy or sell. Or nowadays there is also something called copy trading, and those signals are automatically executed trades. For example, you copy a person where you go to a platform and click on copy person, and you give the amount of the money you want to invest in this strategy of the trader, and you will enter the strategy and have a clear signals on when you should exit. And in the most cases, it is automatically happen and the platform taking care of it. And the other thing is trading bots. Trading bots is in the most cases they are functional and you give them the parameters and you just write the code for it. For example, in TradingView, the Pine script, and you write the code for it, and the code gonna trade for you. What does it mean? You have a trading strategy. You write the code, for example, where to enter and which condition the bot should uh, execute the trade and when should take profit, the risk reward ratios, and much more. Of course, if you can hear me well, it is gonna be great. Just write it in the chat. If you have any questions, please don't hesitate. Just write it in the chat and I will try my best to answer it. And the third thing is his trading indicators. Trading indicator basically based on the price movements. In the most cases, they are based on the price. For example, Apple stock, Bitcoin, or whatever. In the most cases, it is a lagging indicator, we call it in trading also. When something already happened, the indicators follow it. For example, the moving averages and so on, it is all lagging indicators. Or the RSI. It is based on a statistical calculation driven by the price on the trading boards. It is a software, a code where execute your trading strategies and trading signals are being presented by a professional trader, tell you where to buy and where to sell. All of them, in my opinion, are lacking indicators. And let's move on to the next thing is bots. Basically, bots are the benefit of using bots is you can execute your trades 24/7 if you are of course using crypto. If you are trading cryptos, it's going to be 24/7 and in the stock market when the market opens and when it closes. It differs between the four sessions, the London, New York and Tokyo. And of course, the benefit of bots, you don't need always to be in the front of your PC to see the price movements, the indicators movement to be executed. This is a workflow and it is already done for you. You set up your parameters, your workflow, and with the conditions, the pod should be executed and you can go home. And in the most, this could also happen if you are not professional coder and you didn't handle the error quite well and in the Meta 5 it is gonna be difficult because you will lose money. And if you are not professional coder, you're gonna have a mistake in your code. And and sometimes the market it doesn't play in your favor and when you have a bug in your code and suddenly lose money. So be cautious about bots if you are developing yourself. And the second thing is when you buy bots from someone else, it is also questionable. Ask yourself who is the person is selling you bot. Is it just a good marketer or a professional trader? Is it a hedge fund behind it? Is it a financial company behind it? Is a data backed behind it? Is there case studies showing you the bot is quite working well? In the most cases, the bots are thought out there and use few of them. It is nobody give you clear data that the bot is working, and everyone is trying to sell you from YouTubers, from social media ads, and so on. So it is just selling you the dreams in the most cases. If it is working that well, nobody gonna sell it to you, because if everyone have that bot, the strategy, the market gonna shift itself and adapt to it. And that is why bots is to be cautious also about it. As already said, it is in the bots industry, it is we have many bots. The market is driven by bots. The stock market, the crypto market, I think a little bit less, but the stock market is driven by bots. Many years ago, companies started to use bots for their tradings, from algorithmic tradings, and using nowadays artificial intelligence, more advanced technologies. When it's coming to artificial intelligence, the hedge funds are using quite intelligent form of artificial intelligence, and it is quite accurate because they spend a lot of money in it. The best heads in the world are developing those tools and to make sure it is working well and they're earning their money from these tools. And of course, the bot is quite fast and it is working nanoseconds. When sometimes when you see in stocks when it's something bad or an announcement, let's take this example, an announcement, a big announcement is about to happen about a company, and you see it is the result of it, it is the stock jumping very high in milliseconds and or going down in milliseconds. How is that possible? Of course, you can put pre-orders in it, but in the most cases, there are bots who is automatically reading the speech of the speaker and evaluating it and automatically trading it. And that is going to be a more advanced bot, I would say. And of course, in Trading Gene, my company, if you don't know who I am, my name is Mohamed Ali, and I'm the founder and CEO currently at Trading Gene. We develop tools and softwares to enhance your trading strategy so you can minimize your risk and optimize your trade through sentiment analysis and financial reports and billionaire tracking. And the very important is when it's coming to bots to be cautious about it, to ask yourself the who is the developer and which data is backed by the bot and which trades or case studies they have. And as already said, bots are quite lying. Also, if they are used, you can every trading strategy is different, and of course you can use indicators for it to showcase your trading strategy and make the bot working, from take profits to stop loss based on lagging indicators, RSI, moving averages, and so on. Of course, it is not bad to use indicators, but they are lagging. So it's already the scenario is played. To give you the bigger time frame overview, the indicators is quite doing well. When you're looking daily to weekly to monthly time frame, I think you can see it even by your eyes if you are a more experienced trader, but using indicators give you an extra confirmation for it. And what is very important is when you're using bots also to make sure you are using a real-time data and no lag in it. For example, when you're using in TradingView just for testing, is quite working well, and test it in the forward testing with less money. There is two methods of testing in trading strategies. One is backward testing, and the second one is forward testing. In the backward testing, where you test your strategy with already played price movements. And in the forward testing, it says live data, everything is happening live. And so you can see how your strategy would have played in that scenario. And of course, to always be cautious. As already said, there are also bots which is backed by copy trader, professional traders, and my problem with copy trading is in the most cases the people will stay in their trades until it is close in the positive. For example, they entered on, let's say, Apple Inc. stock trade at the price of $190, and the target price was $195, and price went down to $180, and they will stick with the plan until the price is closed at $191. For example, it had a potential loss of $10, and that is quite huge. But the copy trading doing that because they want to show the statistic quite high in the matrix of the copy trading platform. And the both signals in itself, it is quite interesting to visualize it and to see how it's going to perform. It is not bad idea to automate your trading strategy, and if it's working quite well. And the most people are lacking it is the coding skills. And if you like, I can do a video how you can do a signals bot in TradingView using ChatGPT. And just write it in the chat or comment below. I'm gonna do a video about it, how you can make a bot using ChatGPT TradingView Pine script. And the third part of signals, which is also myself, I tried to buy signals when I started with trading, and it was quite a failure because everyone have its strategy, and as a new beginner you are driven by greed and you don't understand what the professionals is doing, if he is a real one, and second of all, his strategy is differs from yours. So it could be he's taking more risk and your money is not enough to take that risk amount to have the risk reward ratio statistically. And because the stock market also is a random walk, it could be losing trades in it also, so you need to be careful. And if you're starting with trading, I would say you should understand the fundamentals of trading, what is stock market, what is ETF, and what is crypto market. So you have a bigger overview. And after that, you can dig deeper into technical analysis, fundamental analysis, and in those categories, you can learn more. And of course, you can try the signals, but please be cautious if you are not sure the signals is quite working well. And what is also noticed by the YouTubers, most of them they are using what is called what is called is it let me think of the English word for it. What is called is leverage. Exactly, they are using leverage to showcase the percentage quite higher. For example, they are risking 1% of the trades, but they are not telling you, and taking 100x leverage. And when the market moved by 1%, they have made 100% on their trades. And they only showing you that trades with 100% return on investment, but they didn't show you that it was quite possible to lose also quite very fast. It is 100 times more you could lose. Let's move on to the next topic. Okay, can you rely really on signal itself? No, no, and yes. It just depends. For example, when you are using more accurate signals, even myself, I'm getting a lot of, I'm testing from Bloomberg, which is called analyst a recommendation. And in that case, the analysts from bigger banks and bigger industries are giving you recommendations on different stocks, and the results of it wasn't quite impressive. Despite the result in the matrix of Bloomberg's were impressive, and then I started using it in the forward trading, but the result wasn't that impressive in the forward trading, as was in the statistically shown by Bloomberg. And yes, there is cases where you can trust a signal. Okay, for example, use signals. Okay, if you have your trading strategy, if you don't have, and you're using indicators to enhance your trading strategy, then there gonna be signals in it, and those signals is quite trustful. And if you are using copy trading signals, I would be careful. If you are using bot signals, be cautious about bug errors. If it's your bot, if it's someone else's bot, ask yourself, is that bot quite working well, or who is behind it? Is it backed by case studies or not? And the risk management is very important matrix when it's coming to bots. And drawdown management also is called. How much percentage are you gonna risk per day to lose? And when this is coming also to the funded accounts, the drawdown management is another questions. Okay, for all of you who don't know what is funded account is, basically you take, there are companies out there, they call prop companies or prop firms, and those companies give you the opportunity to have more money than you have. Basically said, it is giving you a challenge to pass it in 1 month. For example, you pay $100 for the challenge, and if you pass it, you will get an account with $100,000 in it. But the catch in it is those people don't want you to give you a lot of those funded accounts, because their business plan is to win money, through taking the challenges. But it doesn't mean you shouldn't take the challenges. If you are quite sure about your strategy, your trading strategy, of course you should take those challenges to have more leverage in your account without using a leverage in the platform. Okay. And when you have those money, the prof company gonna tell you, okay, your drawdown management or your drawdown maximum per day is 2.5%. This is quite little amount. This The second thing is, they are sometimes asking you on those challenges to have a return on investment 10% in 1 month's challenge, or as I remember, 40 days also. And how you can manage your risk is when it's coming to trading bot signals and more. You can manage your risk through fitting your strategy, understand which kind of trades are you taking, day trading or swing trading or long-term trading. The trade duration is very important also. It could be that you cannot take a trade duration longer than 3 days or 10 days, because you like the capital to afford this amount, because you are taking more trades than you can afford it. And to also understand the risk reward ratio of it. The risk reward ratio, it is basically said how much I gonna risk to get X amount of return. Okay, and the stock market is all about strategically fitting your risk reward ratio with the duration and your time. And every person have his own strategy based on the daily schedule. Some people wake up early, some people stay up in the night, and if you are in Europe, you're gonna do the Tokyo session, and when you stay also in the night, you can do the New York session and more. Is based on your risk levels as a person, and also your time you have. So optimize your trades based on the risks and the time you are willing to invest in it. There is different types of indicators, which is giving you the macro strategies, economic indicators like PMI reports or GDP, which is also GDP also is a lagging indicator because it is already played scenario, and after that the numbers are being showed in the statistics in the index, I would say, or in the chart is the right one, in the chart of GDP. And you should be cautious also about it. There's many lagging indicators, and in the most cases, the hedge funds and other companies is trying to predict those numbers and give recommendation out there. I think even Yahoo Finance or TradingView is also doing prediction of GDP and also financial performance of the companies. And it doesn't mean it is gonna be correct. So be cautious also about it. But if I took an indicator, I would say I would take the macro indicator because it's more accurate and giving you more clearer trends about where the market shift is going. And you can use for the micro indicators like moving averages, MACD, RSI, and more to give you a little bit more clear indication in lower time frames, like in the daily time frame, so you can see where the current trends, the price trend is going. So let me repeat, use macro indicators so you can have a clearer trend. Use micro indicators like moving averages so you have in the day time frame a more clearer trend where you can put your price targets and stop losses. Okay, as I said, I think we talked enough about lagging indicator based on the price movement. So the price moves and the indicators follows. So basically said, let's take an example. Where is it? I think let's go to my stocks, my watch list, and use Tesla for it. And let me show it to you also technical. I think the technical in trading views is showing you how the moving on over here is going showing you the reported estimate of the reported. Oh, no, sorry, let me repeat this again. The blue lines is showing you what is reported, and the gray one is showing you what the estimate of trading view was. For example, let's move on. For this is revenue, this was reported 25 billions and it was estimated 24.5 billions. And when something like this happens, when when the real numbers overcomes the estimation of traders, the price moves up in basically sets. And for example, in the most cases, they are quite near to it, and the price moving toward it. So that was a one part of it, of seeing indicator and predictions. Let's move on to the next indicators, and let me show it also to you. Pine script, Pine editor, I think. I'm not sure. Publish, open, not open strategy. I think I had here. I tested some few strategies over here. Personal strategy backtesting. Okay, for example, this strategy, it is showing me, okay, how the indicator would have performed, the moving average. I tested it the Pine script of TradingView. And let's see also, okay, when you click over here, you can edit also, of course, the colors and the functions and the input. Very important, which moving average are you using? Let's use the faster one. Let's use the 15s and the 100. Okay, not bad. This is quite not bad. Is we are going there and you can change the numbers. But I use Python to optimize my trading strategy when it's coming to the testing phase of backward testing, because I have a little bit more options to test for it. So let's move on. Economic indicator. There is two types of indicators. Which one is moved by the price, and the second one, which I told you, is external, like the GDP, PMI, and so on, or the moving the momentum of the money flow and the cash flows and so on of a company is more external than internal indicator, and it's having its marked impacts based on the performance and the estimation of traders, and if it's outperform what the trader set it what the trader choose to be the target, and the results were outperforming this, is gonna the price gonna move up. So be careful when you go out there and trying to trade, and signals bots are not the perfect match. It is not the perfect combination. What you can do, you can test your strategy, be wise, you can test indicators, and in the most cases is you can narrow it down to support resistance levels and the momentum of the market. And this tip I'm giving you because you are my followers and you should learn from my experience, because I already done many failures and many mistakes to be here today. So use support resistance to optimize your trades, to understand the levels, use the volumes, and use the momentum of your price, and use the external indicators, macro indicators, to optimize your trades. And of course, what you can also do, avoid signals which are not confirmed or not backed by case studies. Avoid indicator which is quite lagging behind and already played out scenarios, moving averages or RSI, MACD, and so on. And avoid bots which is trying to sell you something which is not backed by any case studies or backed by any results. There are only good marketers out there. Believe me, some people can do more sales than tradings, and it is quite a skill. You should also learn it. Sales and trading, they are two different stuff. And when you try to trade, be wise and be careful. If you have any question, please drop it in the chat and I will try my best to answer it. And of course, what you can do also, you can share your ideas about next week content, about what we should talk, and where your problems are in currently, and how I can help you the best way. And you can share your problems, and I will try next time to make a content about it. If you like, I can drop also a ChatGPT Pine script methods, how you can write a code for your strategy testing using ChatGPT. What we also can do, we can also analyze a little bit some trades while you are searching for answers. And you can share your question, of course, in the chats below. So if you are seeing on the sites and on the right sides, you can also write your question over there. Let me just close this one. Just so let me delete it. So it's done. Okay, let's do some support resistance levels. What I do, the support and resistance level, it should touch many points as possible. The pivot points, and of course, when it is market going down, making a formation, also it should touch many points as possible. So when it's coming here, this is quite interesting level. The second level is over here. Okay, what you also can use, fixed range. If you're not sure, you can use the fixed range to see clearer. So approximately over here, another quite resistance level is coming here. So let's do it bigger. So this is quite resistant levels over here. So I'm gonna choose this resistant level down here. So see, of course, let us see what's happens. Okay, what's happened over here? Tesla went down because of the news back then and went quite drastically up by how many percent? Let's see. Okay, by 45% is quite nice trades in the period of 30 days. It is quite nice trade. And what's gonna happen? Let us see. The market is clearly moving upward trends and it had played out the downward flag over here. This is what is happened. Let me use a pass. It's happened bam, 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 and a flag. And probably it's gonna be continuation. Of course, that is not an indicator it's gonna happen, but it is more likely to happen. What I'm also doing, also giving a line over here, taking over here to see it clearer. Okay, it is played out and the take profit is already done for me. What I usually will do, I will take that and additionally add a position starting over here up to there. Of course, I will need also extra confirmation to do that. And for example, the momentum of it. So let's add some other indicators. And what is funny, many people talk about the super trends indicator, which is like giving you clear sites where to enter, where to exit. And of course, that is not true. I have tested it and it is not true. It was a few years ago and it wasn't true as it's being sold out there. What I basically use the Woman 2 divergence, and this is the Cypher B. This is also called Cypher B, and the Woman 2 is a free version of the Cypher B, and this is quite working well. And what I'm looking for the momentum on the cash flow, and also the Stoichkis RSI and RSI, this is in it also, so all in one indicator, I would say basically. When it's coming to technical analysis. Of course, I'm doing also the fundamental analysis of the stocks where the financials are at currently. For example, what you could do, what you could have done is going to my LinkedIn, and in my LinkedIn I'm posting many times. Let's go over there, let's close this one, and let's go down there. For example, today I posted about this subject. Okay, let's see all of it. Uh, for example, looking at the financial statements and how you can analyze them and posting over there, and of course the, for example, ETF cheat sheets and more tips and tricks. For example, the seasonal trading in the market, there are different seasons and you should take care of it. And what we see over here, it is the money moving up. Okay, and we are at the daily time frame, and probably will look for an entry level now. So I would say it is using the fixed range, looking at quite resistant level. It is, and we have over here a one resistant level, and it can go up from the start point over here, and you can place that trades over there. Of course, this is not financial advice. Please be careful. If you have any question, please share it in the chat and let's us continue. So what we also can do, we can look at the prices. Currently the market is moving rates. Casco is down by 8%, Tesla by 9%. Mastercard is doing great job over here. Mastercard is up by 4% in the last. It is up by 4. It is sorry. I said some mistakes over here. It is Casco is down by 1%, Tesla by 4%, and Mastercard by 1%, and Walmart it is approximately 0.5%. And who is doing quite well today? It is Pfizer is doing well. So how the ETF is going? All in red. It's great, all in red. So let's check out also what we have over here. If you don't know what I'm doing, is I'm looking at the right sides of my screen where I have all my watch list of different stocks, crypto, ETFs, and more, where I watch over it. The stock market is quite down. Bitcoin is quite down. Over here, it went up to again $69,000. It is keeping it. It could be quite interesting. Sometimes it happens. Hopefully not for Bitcoin this year. And it's doing a flag, and after this flags, because it is cannot break, it's doing a quite correction, and after that it's going up. And that is also a possible scenario for Bitcoin. And from what I see over here, it is went down. It is moving in a range sideways. It's moving as sideways, I think because of the summer and many traders is out there in the vacations, and that is why we don't have enough momentum to push it upward. So but also I see over here is potentially, let's look at the weekly time frame, is looking quite great, daily is looking great, and also the money cash flow is went down. That is not great. So in the daily is looking well. In the 4 hours charts, the cash flows went down, and potential corrections already happened. This is in play out. And let's move down to 1 hourly time frame. This is in red. There are no clear indications over here. So you cannot predict. I cannot predict currently. The Bitcoin price is moving sideways. The potentially what is gonna happen, as is already played out. We can draw some lines to make it more clear, and either it is gonna move up or down. Let's do it like this. So to be clear, okay, either it's gonna go up from here or it's gonna go down from here. Down from here. Those both scenarios is out there. And many people are bullish about Bitcoins, but of course, what's also noticed, many YouTubers is trying to sell you something, a dream, which could not come true. And be careful when you are watching a YouTuber. Also, ask yourself who are those YouTubers and which references they have. And in the most cases in the crypto space, there are many scammers, and of course, you should be cautious about the YouTubers giving you recommendation about Bitcoin price movements or about meme coins and more. And meme coins is much more riskier than Bitcoin, and Bitcoin is moving quite volatile, and already Bitcoin is quite volatile. Yes, if nobody have any more questions, let's leave it for today. Good as possible, and see you next time. Take care, all of you, and have a great weekend. Goodbye.